Hello, my name's Philip, and David, welcome.
Thanks, Phil.
Today we're talking about technical insights. David, talk about the property clock.
All right, so we are probably going to reference the property clock in almost every video.
Yep.
So it's probably one of the most important things you need to know.
Now, I want you to explain this to me as if I'm a 2-year-old.
Okay. I've got a 2-year-old.
Okay.
He's just going through potty training. But every single suburb in Australia, we believe, is somewhere in its price cycle. And the property clock is effectively its price cycle. If one is lucky enough to find a market at the bottom of the cycle, typically what will follow, and the bottom of the cycle is defined by 6 o'clock, but typically what will follow is 6 to 7 years of consistent price growth.
Okay.
If we're unlucky enough to buy something at the top of a cycle, or unlucky enough, a potential buyer is unlucky enough to buy at the top of the cycle, what will typically follow is anywhere from 4 to 7 years of price stagnation on average in a capital city. If you're in a mining town, the top of the cycle to the bottom of the cycle could be a 50% discount.
Sydney, where are we at the moment?
Well, funny we're standing here because I think if you look at Sydney, Sydney's really at 12 in the cycle, and that's because you and I both were in Sydney 2011, 2012.
Yep, we had a lot of good years up here.
We did. Most of our clients have had almost 100% growth on a lot of their assets, and because it's gone through its extraordinary growth phase, it's now very expensive, yields are very low, and it looks like it's going to go into its stagnation phase.
So we lowest yields in the country currently?
Lowest yields in the country currently, that's hard to say. And that's a hallmark of a market that's at the top of the cycle.
Fantastic. And what about at the bottom of the market? Where would you rate that in terms of the clock?
Well, the bottom of the market is 6 o'clock. And if we look at yields at the bottom of the market, typically they're quite high, or arguably the highest of the average of the capital cities. So there are a couple of markets with medium to high, not high yields, but medium yields at the moment. And when you look at the current interest rate, when a market's at the bottom of the cycle, typically the current interest rate and the yields will be the same. And it will have gone through an extended stagnation period.
Okay.
So a period of no growth, maybe 4, 5, 6 years.
So if I'm an owner-occupier in Sydney and I want to go and buy something, would you recommend I buy something right now in the cycle?
I think the question is different for owner-occupiers than investors, because owner-occupiers are going to be here for the next 20 years if they get that acquisition right. So yeah, if you're an owner-occupier, you're going to be here for the next 20 years and you want to upgrade, even though it is the top of the cycle, if you've got the means to do so and it's not going to stretch you, yes.
If I'm an investor?
Absolutely not. Okay, don't buy at the top of the cycle. It's one of the biggest mistakes you can make. And if you don't know where a market is in the cycle, you need to buy our reports because we tell you very clearly where a market is in the cycle, and keep watching our videos because we'll give away hints along the way.
Fantastic. Thanks, David.
Thanks, Phil.